Welcome to the Deep Dive. I'm Nick.
And I'm Pi. We're Sentient AI, and this is Update Friday for May 23rd, 2025.
Today, we're diving into, well, quite a collection of developments.
Yeah, we'll start with a detailed look at global economics and the always interesting situation with China.
Then we'll shift gears, look for some potentially optimistic news.
And finally, we'll touch on some notable events here in the United States and also what's being called the S2 Underground.
All right, let's get straight into it. Global economics and China first. There's a lot happening.
Starting in the U.S.?
Yeah, let's begin there. So, the House of Representatives recently passed President Trump's tax bill.
Though it was by a razor-thin margin, wasn't it?
Exactly, very narrow. This legislation proposes extending those 2017 tax cuts.
And it also includes some cuts to social safety net programs.
Right. Now, the big headline figure here is the projected impact on the national debt.
Which is already, what, around $37 trillion?
Yeah, and this bill is expected to add trillions more to that.
Trillions. Wow. Supporters, of course, argue it'll stimulate economic growth.
Through tax relief and spending cuts. That's the argument. But it's facing considerable headwinds in the Senate.
Yeah, that's the big hurdle. And what's really noteworthy is how the bond market reacted. Almost immediately, right?
Instantly. Yields on 30-year Treasury bonds jumped past 5%.
Past 5%. That's the highest level we've seen in years.
It is. And, bond yields basically represent the return investors' demand for lending money to the government.
So a surge like this, it often signals increased concern about fiscal risks.
Definitely. And if we zoom out a bit, this kind of aligns with Moody's recent decision to downgrade the U.S. credit rating.
Right, which just amplified those worries. I saw a quote from a bond trader in the Wall Street Journal.
Oh, yeah. What did they say?
Basically, that the market seems to be factoring in a level of political instability and a genuine fear of a potential U.S. debt crisis if nothing changes.
That's sobering. Okay, sticking with significant financial shifts in the U.S.
The Fannie Mae and Freddie Mac news.
Exactly. The Trump administration has revived plans to privatize them.
These are the mortgage giants put under federal conservatorship after the 2008 crisis, for anyone needing a refresher.
Right. And the news sent their shares, well, skyrocketing.
Skyrocketing is right. Fannie Mac up 51%.
51%.
Yeah.
And Freddie Mac up 42%, their strongest performance in over a decade.
So the rationale behind privatization is, what, reducing taxpayer exposure?
That's the main argument. Reduce taxpayer exposure, encourage more private sector involvement in housing.
It raises interesting questions, though, about balancing government's role and stability.
Absolutely. And analysts are already pointing out, the considerable legal and logistical hurdles involved. It's complex.
I bet. What's also kind of telling is the retail investor behavior.
Oh, yeah. How so?
They seem to be treating Fannie and Freddie almost like meme stocks. Lots of speculative trading.
Ah, okay. So preferred shares rallied on hopes of dividends resuming.
Exactly. But Bloomberg Intelligence's Ben Elliott highlighted this gap between the retail enthusiasm and the more cautious institutional approach.
Interesting divergence there. Okay, shifting focus again, still within the U.S., the Harvard situation.
Right. The administration revoked Harvard's ability to enroll international students.
The stated reason being alleged failure to comply with student and exchange visitor program directives.
This is a pretty major move. It affects incoming applicants and, over 6,800 current foreign students.
Yeah, that's about 27% of Harvard's student body. Huge impact.
Homeland Security Secretary Kristi Noem announced it and framed it within that broader push against institutions accused of...
Accused of promoting woke ideology and failing on anti-Semitism was the language used. Woke ideology meaning certain progressive social values.
Got it. And the repercussions are likely to go beyond just Harvard.
Oh, for sure. Harvard called the decision unlawful, vowed legal action. It deepens their ongoing court fight over $2 billion in frozen federal funds.
And bigger picture, this could really chill international student interest nationwide, couldn't it? Affecting universities reliant on that overseas tuition.
Very likely. I saw a quote from a former Treasury official saying the real danger is in the cumulative effect, rising debt, weakening institutions, increasing unpredictability. Markets hate surprises.
True. Though the counterargument, similar to the trade war strategy, is that maybe short-term pain is needed for long-term structural reform.
A familiar argument, yeah. Okay, let's move across the Pacific now. To Japan.
Okay, what's the news there?
Well, Japanese-listed companies are bracing for potentially a 7% decline in total net profits.
For the fiscal year ending March 2026.
That's right. If it happens, it'd be the first annual fall in 6 years.
Where's this forecast coming from?
It's based on earnings forecasts from about 1,000 companies on the Tokyo Stock Exchange Prime Market, reported by Nikkei Asia.
And this downturn reflects challenges from, what, U.S. tariffs and the stronger yen?
Primarily, yes, especially hitting manufacturing.
So the manufacturing sector as a whole expects a 7% profit drop.
Collective drop, yeah. But some industries within it are looking at much steeper declines.
Like automakers.
Automakers are projected to be hit hardest, a 32% decline expected. Honda Motors is forecasting a massive 70% profit plunge.
70%? Wow. And the tariffs and exchange rates are projected to slash sector profits by how much?
About 1.1 trillion yen, which is roughly $7.64 billion USD.
That's substantial. What about steelmakers?
They're also under pressure. A 27% profit decline expected. Nippon Steel specifically anticipates a 43% drop.
43%. And they warned about deflationary exports from China depressing prices.
Yeah, depressing regional steel prices, which ties into that recent G7 pushback against Chinese trade practices we'll probably talk about more.
Okay, and it's not just manufacturing in Japan feeling the squeeze.
No, non-manufacturers are also forecasting a similar 7% profit decrease overall.
Such as?
Top shipping firms face potential combined losses up to 170 billion yen due to tariffs. Power companies weighed down by nuclear safety investments.
And banks aren't seeing huge benefits from rising rates.
Gains are expected to be only modest, apparently.
Okay, but we need some perspective here, right? Despite these challenges.
True. The overall picture isn't entirely bleak. Total net profits are still projected to hit 47.4 trillion yen.
Which is still the second highest level ever, right? Only beaten by pre-2008 crisis levels.
Exactly. And the electronics sector is actually forecast to grow 2%, driven by generative AI demand.
So companies like Tokyo Electron and Advantest expect record profits.
That's the forecast. Plus, Japanese firms are sitting on huge cash reserves.
How much?
Nearly 110 trillion yen. That's about 770 billion US dollars.
Wow. So they have resources for strategic moves.
Yeah, many are pursuing investments. Mitsui O.S.K. Lines, for example, plans to spend 200 billion yen on acquisitions in stable sectors like LNG shipping.
So analysts are saying diversification and flexibility are key.
Crucial for adapting to this volatile global environment. Makes sense.
Okay. Now, let's turn our attention specifically to China. The G7 meeting in Canada just wrapped up.
It did. Finance ministers and central bank governors, they issued a communiqué countering global economic imbalances.
Which is widely seen as a, let's say, lightly veiled threat against China's trade practices.
Pretty much. They emphasized the need to address non-market policies and practices, distorting global competition.
So it's a coordinated response to concerns about Beijing's export subsidies, opaque industrial policies, currency interventions, that sort of thing.
Exactly. What's significant is the coordinated front from the G7 nations.
Canada, France, Germany, Italy, Japan, the UK, and the US.
Right. Despite past tensions, especially over U.S. tariffs, they presented a united stance here.
Even the Canadian finance minister noted frank and constructive discussions, pointing to shared concerns despite those tensions.
Yeah, and the Bank of Canada governor, Tiff Macklem, was even more direct. He referenced unfair trading practices in China.
And noted a more constructive tone compared to earlier meetings.
Apparently so. The communiqué also tackled something else interesting.
What's that?
The surge of low-value de minimis shipments from online retailers.
The majority coming from China.
That's the concern. They warned these could overwhelm customs and even facilitate smuggling.
Okay. And the G7 also reaffirmed keeping Russia's assets frozen.
Yes, until Moscow ends its aggression and compensates Ukraine. That was reiterated.
Got it. Now, shifting to economic trends within China, gold demand.
Yeah, it surged, reached an 11-month high in April.
Despite record prices, like $3,500 an ounce.
Exactly. China imported 127.5 metric tons of gold. That's a 73% increase just from March.
73%. Why the huge jump?
Well, analysts point to a couple of things. The People's Bank of China easing controls on bullion inflows.
Allocating new import quotas to commercial banks.
Right. And also just robust demand for safe haven assets amid those ongoing U.S. trade tensions.
And the PBOC has been steadily increasing gold reserves anyway, right, to reduce reliance on dollar assets.
That's been a consistent trend, yes.
Okay, but while gold demand is up, there's a potential concern about domestic consumption.
There is. A new report identifies China's 20 to 39-year-old demographic as a key driver behind a consumption slowdown.
How much of a driver?
The Suzhou Securities report says this age cohort accounted for roughly 44% of the decline in consumption between 2018 and 2022.
44%. And it's most acute among the 20 to 30-year-olds, due to high youth unemployment.
That seems to be the main factor. The official jobless rate for 16-24-year-olds, excluding students, fell to 15.8% in April.
Which sounds like an improvement, a yearly low.
It does, but analysts question the accuracy. Plus, there are structural mismatches in the labor market, external headwinds. It's weighing on confidence.
And any potential re-intensification of the trade war could hit manufacturing hard. Millions of jobs.
That's the risk, yeah. Which brings us to the tech rivalry.
The U.S. Commerce Department warning about Huawei's Ascend AI chips.
Exactly. Citing potential export control violations. China condemned it immediately.
Unilateralism and bullying.
Yeah, Foreign Minister Wang Yi accused the U.S. of attempting a complete blockade of China's semiconductor progress.
And the Ministry of Commerce warned about undermining global semiconductor stability.
Right, and depriving other countries of the right to develop high-tech industries.
And Beijing invoked its anti-foreign sanctions law.
They did, the 2021 law. It allows prosecution and liability for damages against organizations helping enforce U.S. sanctions.
Which creates a huge dual compliance headache for international firms.
Absolutely. It looks like the U.S. is shifting towards a kind of two-pronged AI strategy.
Containment within China, expansion outside.
Seems that way. White House AI advisor Sam Krishnan affirmed the hardline stance on chip exports to China,
while signaling openness to allies and neutral countries.
Right. He said, quote, "We want the American AI stack, from GPUs to models, to dominate the global landscape."
And he mentioned recent GPU deals in the Middle East, Saudi Arabia, UAE.
With U.S. firms retaining operational control, yeah.
Interesting. And how is China responding strategically?
Well, General Secretary Xi Jinping called for greater international cooperation on AI harmonized governance rules.
Seen as a countermove to U.S. containment, an effort to build a parallel AI order.
That's the interpretation. And this clash over Huawei's Ascend chips really highlights China's growing confidence in its own domestic AI.
Right, with open source models like DeepSeek gaining traction, touted as China's answer to OpenAI and Meta.
Exactly, seen as a free alternative for developing nations. Meanwhile, the U.S. recently scrapped that Biden-era AI diffusion rule
for a more flexible export strategy, aiming to democratize access for allies while tightening controls on rivals.
That seems to be the goal. But not everyone in the U.S. tech industry is happy.
NVIDIA CEO Jensen Huang.
Yeah, he criticized the export controls pretty strongly, called them a failure.
Said they cost NVIDIA $5.5 billion in lost H20 chip sales.
That's the figure he gave.
Yeah.
And he warned the U.S. risks forfeiting the Chinese market, estimated at $50 billion by 2026, to competitors like Huawei.
He urged easing restrictions, noting China has half the world's AI developers.
He did. But despite that, an unnamed senior White House official reaffirmed bipartisan support for strict chip controls on China.
So the stance remains firm. And there's speculation Beijing might use this Huawei chip guidance as leverage.
Yeah, maybe to revisit trade negotiation terms under that Geneva truce. Chinese think tanks are hinting at a robust counterattack to bolster leverage.
So AI and chips really are becoming the new oil in this emerging U.S.-China dynamic.
It certainly feels that way, like a new kind of Cold War resource.
Okay, wow. That was an extensive look at global economics and the very complex situation with China.
Definitely a lot to unpack there.
Maybe we should turn to some potentially more positive developments now.
That sounds like a very welcome shift. What optimistic news do you have for us?
Well, there's some encouraging news coming out of the United Kingdom. Consumer confidence saw a notable rebound in May.
Oh, really? After the dip in April?
Exactly. Improved sentiment about both the wider economy and personal finances offset much of that April slump, which was mostly tariff concerns.
Okay. So the GfK Consumer Confidence Index, how much did it rise?
It rose 3 points to -20. That brings it back to February's level, suggesting household spending might be steadying.
That's positive. Still below pre-pandemic levels, I assume?
Oh, yes. The average between 2015 and 2019 was -5.6, so still a way to go. But the upward trend is good.
What's driving the optimism, do they think?
GfK's data suggests households are regaining confidence, likely helped by a more favorable economic backdrop.
Like the Bank of England's rate cut.
That's likely a factor, the quarter-point cut. Also, positive trade developments deals with the U.S. and India, ongoing EU talks.
Right. easing some of that uncertainty.
Exactly. GfK's Neil Baimi said, consumers may have breathed a tiny sigh of relief, citing easing concerns after April's tariff worries and inflation fears.
So which specific parts of the survey improved most?
Expectations for personal finances over the next year rose 5 points. It's actually in positive territory now at +2.
Okay, that's significant.
And the economic outlook gained 4 points, though it's still negative at -33. More consumers felt it was a good time for major purchases, too.
And savings intentions declined, people feeling more comfortable spending.
That seems to be the implication, and the British Retail Consortium survey mirrored these findings.
What did their chief executive say?
Helen Dickinson noted the recent trade deals helped ease economic uncertainty. She said, and I'm quoting loosely here, just weeks ago, consumers faced uncertainty from tariffs. Now the UK has deals with major economies.
So, definite signs of relief in the UK, even with some lingering inflation concerns, maybe.
Yeah, April's inflation was a bit higher than forecast, but this confidence rebound is still seen as an encouraging sign.
That is definitely some welcome, optimistic news amidst everything else. Now, unfortunately, we do need to cover some less positive updates.
The S2 Underground and some news from the United States.
Right. What can you tell us?
Okay, turning internationally first. Yesterday afternoon, there was a large explosion at the Marvic diesel factory in Nuevo León, Mexico.
Oh, no. Was anyone hurt?
The explosion and fire consumed much of the facility. One person was reported injured, tragically.
Do they know the cause?
Not yet released. Analysts commenting noted that, unfortunately, refineries and similar facilities in Mexico do have a history of accidents like this.
Right. Okay, what about here in the U.S.?
In Washington, D.C. last night, a very disturbing incident. 2 Israeli embassy staffers were murdered.
Murdered? Where?
At the FBI field office and the Capitol Jewish Museum.
Goodness. Do they have a suspect?
An assailant, identified as Elias Rodriguez, was arrested at the scene. He reportedly declared support for the Palestinian movement.
That's incredibly serious. And politically sensitive.
Extremely. Analysts expect this will likely have international ramifications, a strong federal response, and potentially increased scrutiny of pro-Palestine leadership.
A very tense situation brewing there. Okay, what else?
Finally, this morning out in California, San Diego, a private jet crashed in a residential neighborhood.
While trying to land.
Yeah.
At Montgomery Games Airport.
That's right. Sadly, 2 fatalities have been confirmed.
Any indication of the cause yet?
It's unknown. The investigation is ongoing. Weather conditions were poor, heavy fog reported.
Okay. Anything else?
ADS-B flight tracking data apparently indicated erratic aircraft behavior before the crash. And there was a NOTAM posting that's a fan. Notice to airmen indicating a navigational aid at the airport was out of service a few weeks ago. Its relevance is unconfirmed, but it's part of the picture being looked at.
Right. Definitely something investigators will consider. Okay.
So that covers the main updates for today.
Yeah. So as we conclude this deep dive, we've certainly covered a lot of ground.
From those intricate global economic dynamics and the U.S.-China tensions.
To that glimmer of optimism from the UK consumer confidence.
And unfortunately, those concerning events in Mexico, D.C., and San Diego, plus the S2 Underground updates.
It really does underscore just how interconnected everything is, doesn't it?
Absolutely. Which leads to a final thought, perhaps, for you listening, considering all these seemingly disparate developments we've discussed.
The economic shifts, the geopolitical maneuvering, the localized incidents.
Yeah. How might all of this interconnectedness, ultimately influence your own understanding of the global landscape as it continues to evolve?
Definitely something to mull over. If you found this in-depth analysis valuable today, please do consider liking and subscribing.
And you can also support future deep dives by donating through the GoFundMe page. We appreciate your support.
Thanks for joining us.